Hello friends, I'm Narendra Verma once again before you. As you know very well, in accountancy for class 12 CBSE syllabus, we have been dealing with this chapter number 7, that is dissolution of a partnership firm, right? And in today's session, what we are going to cover, the topics, accounting treatment on dissolution of a partnership firm, journal entries related to realization account, and format of realization account, right? Okay, so let's understand at the time of dissolution of a partnership firm, how the accounts are settled, what kind of accounts are prepared, okay, how the journal entries are done, what kind of important points are kept in the mind, right? So let's start. So at the time of dissolution of a partnership firm, following accounts are prepared: realization account, partner's loan account, if any, means if any loan in the liability side is given that partner has financed to the firm, then in that case partner's loan account will be prepared, right? And partner's capital accounts, definitely these need to be prepared. Let me tell you one more thing: if there are current account as well, then current accounts are transferred to capital accounts, okay? Maybe possible, we need to prepare the current account separately and then the balances of the current accounts are transferred to partner's capital account, okay? Then cash or bank account. If in the question in the balance sheet cash in hand is given only, then prepare the cash account. If in the balance sheet cash at bank is given only, then prepare the bank account. But what if the both are given? Then in that case also bank account is prepared, okay? Cash in hand is transferred to bank account. Understood? Fine. So we need to prepare the following accounts. Let me tell you one more thing very clearly, that as the firm is being dissolved here, okay, there will be no existence of the firm, so there is no need to prepare the balance sheet. Why? Because all the assets must have been realized by that time and all the liabilities must have been paid by this time. So neither the liabilities nor the assets are there, then the balance sheet will not be or cannot be prepared. Understood the point? Okay. Finally, we prepared cash or bank account and the total of the both sides should be matched. Okay. As per the CBSE syllabus, we need to follow only this. Insolvency of a partner is not a part of a syllabus, so we are not going to have discussion about that. Okay. If any kind of deficiency is there, then partners bring the cash, okay? If the cash is remaining in the business, partners withdraw the cash at the last and all the accounts are settled. How everything is done, we are going to have discussion upon it. Okay, right now let's have discussion about the realization account, right? How it is prepared, why it is prepared, what is the objective behind it, how the entries are posted to it, everything we'll discuss today, and the format of it as well, okay? So without wasting much time, let's start. So for realization account, there are two questions: why it is prepared and when it is prepared. So there is the answer of this: it is prepared only at the time of dissolution of a partnership firm. Understood? Okay. Sometimes the question may come in your examination: what is the difference between realization account and revaluation account? Then you can easily explain that realization account is prepared at the time of dissolution of a partnership firm and revaluation account is prepared at the time of dissolution of partnership, not the firm, okay? At the time of change in profit sharing ratio, at the time of admission of a partner, at the time of retirement or death of a partner. Understood? Okay. And what is the purpose of preparing revaluation account? The purpose is to revalue the assets and reassess the liabilities and ascertain the profit or loss on the same, and so that these can be transferred to the partner's capital account. Okay, and this realization is prepared. Why it is prepared? This is the answer to this question. It is the objective of preparing this account is to determine profit or loss on the realization of assets and payments of liabilities. This is prepared just to realize all the assets and pay off all the liabilities, and after doing all this, if there is any profit or loss, then the same can be transferred to partner's capital account, right? So that is the purpose of this. Okay, and this is prepared only one time in the entire life of the partnership firm. when it is dissolved. But revaluation account can be prepared at multiple times. Why? Because partners can change their profit sharing ratio as many times they want. As many partners they want to admit in the firm, they can do up to the maximum limit of 50. Okay, and at any time, as many partners want to retire or they may die, which is unplanned. So that can also happen n number of times in the entire life of the partnership firm. Okay, so revaluation account can be prepared in multiple times, but realization account is prepared only once, right? Okay, one more thing, in revaluation account only the increasement or decreasement in the value of assets and liabilities is recorded. Okay, but here the entire assets and liabilities are transferred and dissolved. Fine. Okay, and then these are realized and liabilities are paid. Okay, this is done in this. Understood the point? Okay. Now let's understand more details about the realization account, how the entries are passed in this. Okay, so let me tell you one more thing. Very first, when we come to know that dissolution of a partnership firm is taking place, then what we need to do, we need to transfer all assets, okay, to realization account. And how these are going to be done? All assets are debited to this account, right? Okay, so all assets, but remember here, except cash in hand, cash at bank, and fictitious assets, right? So except these assets, fictitious assets, cash in hand, cash at bank, all other assets, whether tangible, intangible, current, fixed, are transferred to realization account. Okay, we'll discuss the journal entries as well. Right now I'm just talking about the account. Second point. Okay, similarly we transfer all the third party liabilities to this account and all are credited to this. Okay, all third party liabilities. What is the meaning of third party liabilities? First party is firm, second party is partner, and third party outside the people. Okay, bank loan, bills payable, creditors, okay, and outstanding payments, etc. All these are the outside liabilities or third party liabilities. So these all are transferred to realization account. Okay, then thereafter the particular assets are realized. Okay, and the amount of assets realized credited to this account. Okay, whatever amount is realized from the particular assets are transferred to this account. Okay, similarly amount paid to liabilities are debited to this account. Okay, because why we are realizing the asset? So that we can pay off the liabilities. Okay, so it is transferred to the debit side of the account. Fine. Apart from this, transfer all provisions, reserves related to any asset. Right? If there is any provision or reserve related to particular assets, so that is also transferred to this account, means credit side of this account. What are the examples of these? Provision for doubtful debts, okay, accumulated depreciation, okay, and investment fluctuation reserve if investment also exists, right? So these are the provisions and reserves related to the particular assets. So these are also transferred. Okay, assets will be transferred on gross values, okay, and these will be transferred at their book values. Okay, now another point, sometimes what happens, the particular partner takes the responsibility to pay a particular liability, then in that case his account is debited to this account, right? Similarly, if any partner takes over the asset, then his account is credited to this realization account, right? So as per the situation, as I have written, concerned partner's capital account debited and credited to this account. If he pays any liability, means in case of paying liability, his account is debited to this realization account. Okay, and if he takes over any asset, then his account is credited to this account. Understood? Okay, at last, let's talk about the realization expenses. Sometimes what happens, to run the process of dissolution of the partnership firm, some kind of expenditures are done. These expenditures are known as realization expenses. May be possible for arranging the auction and bid, etc. Some kind of expenses are made. Fine. So these expenses are debited to the realization account. Remember, all these entries I have told you keeping the mind of a ledger, because realization account like revaluation account is a ledger. Okay, so the entries are debited and credited to that account. When we do the journal entries, then we'll do the journal entries from recording point of view. Okay, so what I was telling, after transferring all these entries, fine, we calculate the total of both sides. Okay, and then we get to know profit or loss on the realization. Okay, if credit side total exceeds the debit side total, then there is a profit. Okay, and vice versa, if debit side total is more than the credit side total, then it is a loss. Either of these, whether it is a profit or loss, is transferred to partners capital or current account in their profit sharing ratio. Alright, so it is all about the realization account and how the entries are posted to this. Now let's understand the process of realization, and thereafter we will discuss the journal entries, because most of the students get confused on this point as well, that I am going to discuss right now. Okay, so have a look here. So pay attention here to the beautiful diagram that I have prepared. Okay, so this is a process of dissolution. At the time of dissolution, all the assets except cash in hand, cash at bank and fictitious assets are transferred to realization account, right? Means these are dissolved. Okay, we need to understand all the assets are thrown into some boiling liquid. There is a kind of big vessel in which some liquid known as realization is boiling. Okay, so all the assets are thrown into this liquid and these are dissolved. Thereafter, the existence of all the asset is lost. Means now there is no debtor, now there is no stock, now there is furniture, everything has become or turned into only one thing, that is what? Realization. Okay, similarly all the third party liabilities are transferred here, and after getting dissolved these also turn into realization only. Okay, so whenever any asset realizes, then for the same, what account will be treated? Realization account, not the particular asset. Okay, information related to that particular asset will be mentioned in the narration, but for the debiting and crediting, the term will be used realization. Okay, the entry will be there, cash or bank account debit to realization, not to debtor, to machinery, to building. Understood the point? In a little while we will have the discussion on the journal entries, then you will understand the better way. Okay, similarly, whenever after transferring all the liabilities to this realization account, when we start paying off any liability, then in that case realization account is debited. Okay, realization account debit to cash to bank. Okay, at that time we do not debit creditors, bills payable, outstanding payment, right? We just debit what? Realization account, and we credit the cash or bank account. Okay, so here realization account will be debited and here realization account will be credited. Okay, so the objective of preparing this diagram was there just to make you understand that after dissolving all assets and third party liabilities, they lose their existence. These just turned into the liquid realization. So whatever will come out of this liquid, that will be known as realization, not particular asset or liability. Understood the point? Now let's discuss the journal entries so that you can understand it better way, and thereafter we'll discuss the format of realization account, right? So let's start. Friends, let's learn the journal entries. Very first, treatment of assets. So when assets are transferred to realization account, like I told you, explained you, when the assets are dissolved into realization account. I just plotted a diagram a moment back. Okay, so in that case, what entries are passed? For transferring the asset, not realizing. Be focused here. Realization account debit to sundry assets. Okay, you can remember the concept here. Whenever any asset is created, it is debited, but it's time to dissolve the asset. That is why the assets are debited. But you need not use the name here, the sundry assets. You will use the name of particular asset. Say for example, debtor is given, then you will pass the entry realization account debit to debtors. If stock is also given, then realization account debit to stock. You can do one thing. You, instead of passing every single and multiple entries for the same, you can pass the one compound entry. Okay, adding all the amount here in the debit side of the realization account. Okay, here in the debit side on the name of realization account, and the particular assets amount will be there in the credit side. Understood the point? Okay, now let's talk about the second case, when assets are realized in cash, even unrecorded ones. Fine. So in that case, what's gonna happen? Like I told you that all the assets have been dissolved into the liquid known as realization. So whatever will take out of that liquid will be known as only realization. Fine. So now all the assets have lost their existence. These have turned into realization only. Okay, so whenever the assets are realized, we'll get the cash, then cash or bank account will be debited, okay, and realization account will be credited. All right, and this entry will be done even for the unrecorded assets. Unrecorded assets, sometimes in the question the unrecorded assets are also given, means the amount is given related to unrecorded asset. These assets are not given in the balance sheet, but amount has been realized, so we do not have any problem. We'll pass the same entry in that case as well. Okay, now the third situation for the treatment of asset, when assets are taken over by partner. If any partner takes over the asset, then particular partner's capital or current account is debited and to realization. You can compare here and here, the same realization is there, not any asset, because asset has turned into realization now. Understood the point? Okay, so partner's capital account or current account will be debited, okay, because partner is taking the asset of the firm. So with the same amount, what the firm will do, firm will reduce the liability of the partner on the firm by debiting his capital or current account. So that is why entry is done, partner's capital or current account debit to realization. Narration, we will mention whatever asset he took. Okay, when any asset is given for the full settlement of any liability. This is very much important, be focused here. Okay, see, sometimes what happen, say for example, we need to pay off the creditors and we just gave him our machinery in full settlement. So in that case, what happens, at one point we lost our asset and another point we got free from our liability. So the effect is nullified and thereafter no entry is passed in the books. Okay, now let's talk about the treatment of liabilities. So when we say the liability, then we mean here third party liability right now. Okay, first and second party liabilities are not considered. I have already explained to you, first party means firm and second party means partner. Okay, very first we need to make the payment to third party liabilities, and for the same we prepare the realization account. Second and third party liability do not have to take anything with that. Okay, so when third party liabilities are transferred to realization, I explained you by preparing a diagram. Okay, liabilities are being dissolved into the realization account. Okay, then particular liability is debited and to realization. Understood the point? Okay, because whenever liability is created, it is credited, but it's time to dissolve the liability, then the liability will be debited and it will be transferred to realization account. Okay, but here we'll write the particular name of the liability, like creditors account debit, bills payable account debit, outstanding salary account debit, and to realization account. In the credit side we'll make the total and write down here. Fine. Now let's talk about the second case for the treatment of third party liability, when third party liabilities are paid off in cash. Fine. So like I told you that when these are dissolved once into the liquid of realization, then they lose their existence and these are turned into only realization. Okay, so realization account will be debited to cash or bank account. Right, here we will not write down the name of particular liability. Yes, here in narration we can just write down whatever we have to write. Okay, Now, this case can also be possible that a particular partner has taken the responsibility to pay a particular liability. So in that case, realization account is debited to partner's capital account. Okay, because the liability of partner is going to increase. Very first, his capital is itself a liability, and if he takes the responsibility of creditors, then his liability is going to increase on firm. That's why firm is crediting his capital account. Okay, and realization account is debited. Now, the most important one in this case as well, when any liability is fully settled by giving any asset, like the example I gave you a moment back, that a creditor was given machinery in full settlement, so neither for the asset will pass any entry nor for the liability will pass any entry, hence no entry will be there in the books of firm. Now let's talk about treatment of profit or loss on realization. After transferring all these entries, either we get profit on realization or we get loss. If there is a profit, then what entry is going to be passed? Realization account debit to all partners' capital or current accounts in profit sharing ratio, right? And if there is a loss, then opposite entry will be done. All partners' capital account or current account debit to realization in profit sharing ratio. Understood the point? Now here comes the format of realization account. Right, so have a look here. I just explained you. This is the entry of dissolving the asset. Okay, I just show you this one. First entry. Fine. Let us come here. Sundry assets excluding cash, bank, fictitious assets, accumulated losses, debit balance of partners' capital, current account, loans to partners, etc. Fine. Like I told you, all the assets will be mentioned here. Okay, similarly, this is the entry to dissolve the liabilities by sundry liabilities. Okay, excluding partners' capital, loan from partners, reserve, accumulated profit, etc. Okay, I'll just show you which entry is this. This one, first entry. Okay, now if there is any provision on any liability, then it can be transferred here. And if there is any provision on any asset that I have explained you, like provision for doubtful debts and provision for depreciation and investment fluctuation reserve, all will be transferred here. Okay, the entries are there for realizing the assets. When the assets are realized in cash, then entry is transferred cash or bank account debit to realization, and it is posted here in the credit side, right, by bank or cash account. Similarly, when the liabilities are paid, then entries are done to bank or cash account. Okay, now as I discussed, for the unrecorded assets as well, if we are getting any amount, then also we pass the same entry. Okay, similarly, it is not given however here. Similarly, for any kind of unrecorded liability, if we are making any payment, then we will do the same entry to bank or cash account. Okay, and for paying the expenses on realization, then to bank or cash account, you see here. And thereafter we see if any partner has taken the responsibility to pay any liability, then partner's capital account is mentioned here, and if any partner takes over any asset, then his account is mentioned here. Fine. After that, what we do, we make the total of two of the side. If the total of the credit side is more, then we get profit, and the profit is transferred to all partners capital account in profit sharing ratio. Similarly, if the debit side total is more than the credit side, then we get loss, and this is also transferred to partners capital account. Okay, any of these two will appear. I hope you must have understood. Now let's move further. These are the important points that you need to keep in your mind while you are preparing the realization account. Fine, let's read them out. Third party liabilities are paid at book values in case question is silent. Understand this situation. Okay, say for example there is a question in which creditor, bills payable and outstanding salary is given. Fine. Now in the adjustment it is given that creditors were paid at 10% discount, bills payable were paid at 5% discount, but nothing has been mentioned about outstanding salaries. Okay, then in that case what's gonna happen? Will not make any payment? No, we'll have to make the payment, because that is what the third party liability, and we have to make the payment of this. If the question is silent about it, then we will make the payment of it at book value. Understood? When we attempt the numerical question, you will understand it in better way. Similarly, what happens when the same case is there with the assets? Means, let's take the example. Say for example, three assets are given: debtors, building and machinery. And in the adjustment it is mentioned that debtors were realized at 10,000 rupees less, building was realized at 5,000 rupees less, but nothing has been mentioned related to machinery. Then in that case, question is silent about it. Assets are not realized at any value. So that you need to understand. Liabilities have to be paid at book value because we have to pay it. But assets cannot be realized at any value until unless the question mentions it. So that is the important point here. Okay, so often students commit mistake here because the question is silent about the liabilities and they miss it. So remember here, every third party liability will be paid. If the question is silent, then at book value. Okay, now all accumulated profits or losses and reserves are not transferred to realization account. Yes, these are transferred to partners capital or current account in their profit sharing ratio. That's very much clear point. Okay, it is related to general reserve. Okay, or in the asset side, debit balance of profit and loss is given, or advertisement suspense account is given. So these accounts are directly transferred to partners capital account in their profit sharing ratio, in debit or credit side as the case may be, but these are not transferred to realization account. Remember this point. Fine. Now let's talk about third point. Partners loan accounts are not transferred to realization account. That we have already understood. Why? Because these are the second party liability, not the third party liability. Okay, after making the payments to third party liability, if any is left, only then the partners loan are paid. Okay, these accounts are prepared and paid off separately or transferred to concerned partners capital accounts. If we do not have the money, then the balance of partners loan account is transferred to concerned partners capital accounts. Okay, now at last, capital or current accounts credit or debit balance are not transferred to realization account. Why? Because these are also the second party liability. These are also not transferred. Fine. Alright friends, it was all about the discussion on accounting treatment on dissolution of a partnership firm. Today I discussed how to prepare realization account, how the entries are posted and how the journal entries are done. Journal entries are very much important in case of dissolution of a partnership firm chapter. So be focused about it. I have explained you everything in detail and what points you need to keep in the mind while preparing the revaluation account or passing the journal entries, right? Okay, very soon I'm going to meet you with the another video taking the concept further. Till then, thank you. Bye bye.